Hey traders, Akil here with this week's T2T live room review. This week's video is going to be a little bit different because I actually had a very busy week with some issues happening in the household, so didn't have a time to record any videos after our sessions. Seeing how the market has been berserk the last few days anyway, probably wouldn't have been recording much, but I do have something today. And just to give you a recap, it's been a very rough week trading the last 2 weeks, especially for ratio and harmonically based traders. And one thing I remind my live room members today is that you can't let that defeat you. You can't start thinking, hey, these Gartley patterns don't work, cipher patterns don't work, these structure trades don't work, just because you've been hitting a streak of losers lately. You got to stick to your guns. You got to dig in deep and fight through it. Because what will happen, and this happened to me in the past, and it was one of those incidents where I lost, almost $30,000 in a matter of a few days for someone else, was that it came a point in time where the system wasn't working. I lost faith in it. I decided to stop trading it, and then the system started working again, and I wasn't involved. So, and that's the point of when you do all your back testing and you go through the markets, make sure you pay attention to, what's your maximum drawdown, what's your biggest winning streak, what's your biggest losing streak. So if you know that your biggest losing streak is, say, 6 trades, then when you get to 6 in a row, you're not really bothered. Instead of saying, oh man, this has never happened before, this is weird, it shouldn't be going like this, you're now saying, okay, we've been 6 trades before, I lost 6 in a row, now it's time to start winning. So keep firing is what I'm trying to say. And we had a good example of that in the live room today. Took a few winners. I'll start off with Aussie dollar here, which you see looking for target ones to get hit for the second half of this trade. Here's what we did first. And again, I'm using my charts, range bar charts with the DSR zones on it. Dynamic support and resistance for those who aren't familiar. And basically took a double bottom down here as target ones are hit. Let me move this to break even, put some money in the bank, and we'll get target 2 set maybe later in this video after you guys are done. But basically this is what we saw. If you follow my my gold circles as far as and my DSR zones as well, you'll see we saw structure here, structure here, structure here, and was waiting for the market to come back, retest the structure, and then shoot back up. And I'm not sure, I forgot what we put, we probably threw some Fibonacci's in there, knowing myself. Yeah, you'll see a 618 right around that level. I'm just guessing I did something like this. Maybe not that. Let's see. 127 extension. Yep, we'll get a 127 down there. Fibonacci inversion, we'll get a 1618. Yeah, so did my normal Fibonacci cluster and said, hey, this is a level that I'm interested in. Market came down, RSI went oversold, retraced back up, put in a double bottom, got RSI divergence, and we bought it up. Took target 1s off around here, 618. Took target 2s off, right at a retest of the structure level. And then here's what I did. Larger time frame, here's what we're looking at on Aussie dollar. If I go to my daily chart. Market right now is retesting this structure zone. There's a small ABCD in with some Fibonacci confluence as well, but mainly retesting this structure zone. As you go down to an hourly, or even go down to our 15-minute chart, you'll see that I was waiting for a double top here. And when the market retraced and got to this level, again, our same structure level we've been watching, I saw this wick shot straight up, sucked it right back down, and took an aggressive entry. So got long, took profit, target 1s off here, target 2s off here, came into that aggressive entry point, got short, rolled down, hit target 1s. So right now we're looking at let me just, if I can find my calculator, add it up real quick. And I don't usually like talking about profits, but it gives a good example again of trading one pair on a day trading time frame, you can make a living doing this. Let's see, entered at 105.71, 105. Forget it. I think we made about 50 pips on the way up, and you just saw we made about 30 on the way down. So 80 pips so far just on this move. And if we go down to target twos, we'll make some more. Maybe could get 100 pips today just off this one basic move. And again, this just comes from knowing structure and knowing how to trade. Other trade we took today was dollar Canada, and I'll go through this shortly. Basically had a cipher pattern completion, looking at X to A to B, B to C, and we had our CD completion right up here, shot down, hit target ones, so made a little bit more money. Pretty short video this week, so here's what I'm going to do. This morning I did a video for our syndicate members, and again, that's a program where Jason and I post our swing trading charts or swing trading setups and training and stuff like that. I'll give you guys a look at that. Now, that was this morning. I haven't looked at the higher time frame since, so some of those patterns or trades could be busted, but I'll give you a sneak peek at that, and I'll see you next week, traders. Take care. Hey traders, Akil here once again. Hope you all survived yesterday's storm. Now that we're done, and the market has been pushing a lot, to say the least, we do have some new setups that I'm taking a look at, mostly on the daily charts. And on a lot of these daily charts and 4-hour charts, we are really oversold or overbought. So I wouldn't be surprised if we're going to see some pullbacks. Maybe not today, being a Friday and all, but maybe perhaps next week some pullbacks in the structure zones before either going on our way or just retracing back to where we came from. But anyway, I'm here on dollar Swiss 1 hour or 1 day chart. Somewhat of a difference between 1 hour and 1 day, I suppose. Here's what I'm looking at. We have a potential cipher pattern, and again, if I take my impulse leg from here, we'll move from X to A. See that we come into the 382, no problem. If I take my Fibonacci extension, and this is where it may be different for some of you depending on your data. If I take my Fibonacci extension from my X leg to my A leg and back down, you'll see I'm coming right into the 127 extension. Now again, I have very strict rules on whether the market has to hit it or not, and if you have the same, make sure it hits your extension. I know a few people, I like to see a true hit instead of just a nip. So we didn't get that here, but technically we did hit it, so technically I have to count it. So we have our X to A coming down to our B, we have our B coming up to our C, and of course our D completion down at 92.38 for dollar Swiss. So looking at our 786 around 92.38, also bumping into some structure. 1, 2, 3. I don't know if we scroll back. I don't have a lot of data loaded. Scroll back, we'll see at least one more time, and who knows, we may see some more in the past. But cipher pattern on its way, about 70 pips away as I'm recording this video on dollar Swiss. Next, let's go to dollar CAD, something I've been watching for a while. I'll actually delete this, but potential Gartley pattern on dollar Canada. Yeah. Let's think about going to a weekly. This will work. Looking at our X to A right here, our B to C. Let's see if I draw my fibs in. We'll take our X to A. We're going to come into our 618 retracement. Fibonacci retracement from our A leg to our B leg. See, we come right back in between the 618 and 786, which is what we want to see for our C leg. And for our CD completion, we'd expect an equal move. Oops, get over here. Here we go. ABCD pattern, which will put our completion down at 95.54. Now also a few other ways to measure it. I'll bring my 886 in for my X to A leg, see where that lines up at. That's going to be a little bit lower at 95.41. If I take a Fibonacci extension from A to B, we're going to see that our 127 comes in right near our 886. And lastly, take a Fibonacci inversion from our C leg back to our B leg and see where that comes in. We're going to have a 127 up here and a 1414 right in the middle. Take the 1618 out. So in situations like this, again, it all depends on what are your rules for a Gartley pattern. Do you A, always trade them at the 786 retracement? Do you B, always trade them at the ABCD completion? Or do you C, trade them at the point that has the most confluence? So you'll see we have a zone from, I guess, all the way up here at market right now, 786 to our 1414, a kill zone. You can also say, hey, since this is a pattern on a bigger time frame, I'm going to wait to see if the market double bottoms or 3-bar reverses or does a break above, close above bar entry technique. But for me, when I look at my patterns, I look for the area with the most confluence. So when I see 127, 886, and 414 all within this little zone, basically what's this, 95.64, basically a 30 pip zone in here, this is the area I'll be looking to buy at. So cipher pattern on that, Gartley pattern on Canada, a few other setups, especially on I think it was pound yen. Nothing too great though. I'll go over it anyway. This is not the best, but I was just playing around with my analysis this morning. Could have a potential. First of all, we could have a potential bet here on pound yen. Looking at either here, you can even take the bigger. Oops, not the right tool. The bigger impulse leg move. But in the meantime, the next point that we may turn around at, and I say may again, this isn't a powerful move, but would be somewhere in this area, testing that part of structure. And what I do in my analysis, I just start drawing the ABCDs and harmonic moves in to see, hey, what will complete there. So if we have an ABCD completion from that move, you'll see we'll bang in right into that level. If I draw on the Fibonacci extension from here to here, you'll see we'll get a 127 at that level as well. You can draw an ABCD pattern in from the latest move. Copy and paste that as well. You'll see we're also going to line up in that level. Draw a Fibonacci extension in. We're going to get a 1414 a little below there and a 1618 right above. What am I doing? Here you go. 1414 right there, and 1618 is going to be right above. You can even go down to say the 4-hour chart and start drawing things out here as well. And again, doesn't mean it's a good entry point, the best entry point. I'd definitely wait for the advanced pattern, but shows you can build a way to get into the market. So if we do get to this level, say we get like a double top or some type of sign that the market's losing momentum and going to reverse, you now have your reasons to enter based on your CTS score. You have an ABCD completion, you have a Fibonacci confluence or ratio confluence. So you'll have RSI overbought. So you can have a CTS 5 easily at that level. Now again, you can always make the choice and say, hey, there's an advanced pattern setting up a little bit above it in a higher structure level, and we know that advanced patterns are more powerful, so I'm simply going to wait until that gets hit to enter. But it all depends on what type of trade you are. If you're aggressive, I say go for it. If it loses, go for the next one. If you're conservative, wait for the entry reason that meets your rules the best and gives you the best opportunity not to lose money. Now, notice how I said that. Not the best opportunity to get money, the best opportunity not to lose money. Again, trading is about being safe and about preserving capital. Alright, so that's it for this week, traders. We'll see what happens in the market today. Again, a lot of these markets are overextended, meaning either overbought or oversold. So wouldn't be surprised if we see some pullbacks into structure levels, again, either today or either early next week. So we'll see what happens, and have a great day.